Hello everyone, welcome back. In this episode of Bitcoin Trade, I'm going to go over I'm going to go over this article, and I think it's great for anybody who's trading Bitcoins. Either whether you're trading at the exchange or in real life, whatever. Um, I'm going to go over this article. I think this is a great article. This is Crypto Coin News. And there's the author right there. You can see that. There's the date. So let's go over some of the things that this author points out here about trading. Lesson number one, first thing, 70 to 90% of traders lose money. Now, that is, I think, very true. I think most of the losses come from retail investors. Of course, if you know anything about selling financial products, it's packaged, it's created and packaged, and then sold to the different investment institutions. You know, your Edward Jones of the world, your Charles Schwab's and Ameritrades and all that, and then it's sold to you, right? Um, so by the time you, as a retail investor, by the time you get it, it's you know there's not much to do other than to put out into the open market through the stock exchanges and stuff like that. But the problem with stock exchanges is they're a closed market. You can't dictate the price. Um, you know, you're just stuck. It is what it is. So if the price goes down, you're stuck with the price being down. You can't try to sell it for a higher price to someone because it's a closed market. So now let's go to the second one, and after that's true because there's some other reasons I think. A couple of reasons is, and I'll give you an example. Like when I traded forex, I could never seem to make a really net gain. And no matter how far I put my stops or limits and everything, it would hit them and then go the opposite way, you know. And I think there's definitely manipulation there because they know your position, they know your stops, they know your limits, they know how much money you have. Um, you know, it, there's some information there that I think is not private. I definitely feel that there's some collusion going on, and I think there's been some um, reporting on that as far as collusion and manipulating prices. So let's go down to the next one, and there's some good points here. The author also mentions a lot of other things like you're betting against everyone else who are more experienced, who know the market very well, etc., etc. But I think there's more to it than that. 70 to 90% of trades are losing money because it's a zero-sum game. Somebody has to lose for somebody else to make a gain. So there is something about these closed markets that um, you know make it so that 70 to 90% of your trades will lose money. So let's go on to the next one here that they talk about. Prediction is impossible. Yes, that is true, and it talks about how monkeys do just as well as very sophisticated traders. It almost seems random. And there is something about it. In the short term, you could probably make a very good prediction. Long term, if you're talking about several months, especially with Bitcoin, it's very difficult. Um, Long term predictions are virtually impossible, virtually. But I don't think it's um, not possible, but it's hard long term. Short term, yeah, because you see the trends and you see the momentum, and you see it getting hot, then you'll see it cool down, and then obviously you'll see it go down, and then as you see the downward trend ending, you can, short term. But anyways, prediction is impossible. Yeah, I mean, it's just you're just guessing. It's all speculation, and that's the other thing you got to remember when you trade, you're speculating. All right. Now, the reason why you're trading is maybe maybe you should question, why are you trading? The author makes it sound, the writer of this article makes it sound like, you know, if you're trying to compare the way Bitcoin is traded to traditional financial instruments that are traded, like stock exchanges, NASDAQ, New York Stock Exchange, Forex, whatever. If there's an indice for it, and there's a market for it, and when I say market, I mean there's an exchange, an actual exchange, a company, you know, I'll give you an example: NASDAQ, New York Stock Exchange, S&P 500, those kind of things. Um, you know, again, Bitcoins are not quite like that. They're very different. Matter of fact, if you go to one of my very, very few first episodes, I even talk about why they're different. And the main reason why they're different is because, between the traditional exchanges and Bitcoin exchanges, is when I want my Bitcoin, I can put that Bitcoin into my wallet. And here's the other thing about Bitcoin that you can't do in a traditional exchange, financial exchange, is you can't dictate your own price. Your price are dictated by the exchange. Now that's kind of true for Bitcoin exchanges, but the difference, remember, huge difference. I can take my Bitcoins out of that exchange, put it back in my wallet, and then in the open market, the real open market, not the virtual open market, not the closed market, but the virtual, the real market, like out in the open, on the streets, right? You can sell your Bitcoins on the streets and get whatever price you want. You may have to wait a little longer to get like the really high price, or you can kind of lower your price a little bit and sell a little faster. It depends. And if you're really desperate, you can go below market price. I don't know how desperate you would be, but to each its own, right? And then let me see what else they talk about. Technical analysis is challenged. Okay. If you're all new to watching any of my videos, I highly recommend you start from the beginning of my episodes, where I did mention something about technical analysis, where you can get paralysis by analysis. Technical analysis are tools to help you trade. Just because you put a line at the bottom of of this trend doesn't mean it's going to bounce off that line. I wish it did work that way, because man, I'd just make a line going straight up. And if it just did that, just because I put a line up there, I wouldn't have to sell my Bitcoins. I would hold them. But technical analysis are just tools to help you trade. Again, the writer of this article is writing. It seems like based on traditional financial exchanges. Bitcoin is very different from that, in that the fact that, if I trade Starbucks, if I buy a stock of Starbucks, I don't get, paper stock from Starbucks saying I own X amount of shares in the mail. I don't get those. It goes to the brokerage and stays with the brokerage. They handle all that. So I'm at the mercy of the brokerage. I'm at the mercy of the financial institutions on what price they can put out, right? They always say, well, it's it's the market. The market dictates the price. Well, you know what? it would be great if I can actually get that share of Starbucks or whatever. It doesn't have to be Starbucks. I'm just using an example. Let's I don't know. Uh, let's pick a let's pick somebody. Let's pick on J.P. Morgan Chase. Let's say I buy stock of J.P. Morgan Chase. I can't go to J.P. Morgan Chase. First of all, they don't even send me the stock. All right, and if they did, I don't know if I can ever go to J.P. Morgan Chase and say, hey, J.P. Morgan Chase, um, I want to cash out on your stock. So go ahead and just deposit that money into my bank account. Don't do that. It won't. It's not going to happen. It doesn't work that way right now. Um, and on top of that, since they never issue me, all right, they never issue me the stock. They issue the brokerage the stock, or they hold it for whatever. I don't even know if that stock even exists when you push the button when you trade a stock. I guess it exists, but you never see it. So you have to ask yourself, is that even real? That must be all illusion. So, you know, even if they did send me a stock, I couldn't go to the bank, J.P. Morgan Chase, who issued the stock, and get my money back. And I, since they don't even send me any stocks to sell, to out in the streets, in the real world, I can't sell it for higher than what I bought it, or at a price that I want, right? So you're in a closed market. That's why you're a loser. If you're a retail investor, that's why you're losing, because you're in a closed market. So technical analysis is challenged. So yeah. And then here's another one. This is specifically talking about Bitcoin. Arbitrage is risky in Bitcoin world. Now, I've spoken about this before in previous episodes. There's some ways you can perform arbitrage through the exchange. It takes initial investment to buy a Bitcoin on the different exchanges, and from there you can sell on one exchange and then buy more on another exchange without ever moving Bitcoins around. But that takes some time and takes some money, because you gotta have several exchange accounts, and then you gotta buy at the same time. So you're already taking kind of like a win-loss. But at the end of the day, I think it really doesn't matter, because I really thought about that, and it just seems like a lot of work for a couple dollar gain. Maybe at most $10 gain, but after you account for all the trades, um, they take a bit of your Bitcoin or money when you trade every time, with that 1, 2, 3, 4, 5%, whatever, 0.005%, whatever it is. You're losing some every time you make a transaction in the exchange. So, and it seems like a lot of work. That's the other thing. And then you got to put your initial investment into those exchanges, and then buy and sell off of each exchange based on arbitration. You don't really do arbitrage through the exchange. You use the exchange as an indice to perform arbitrage, but you don't do any arbitrage through the exchange, if that makes sense. You can trade on the exchange and all that, which I do, but in reality, when I actually want to sell my Bitcoins, I sell them out in the open market. So I'll buy Bitcoin and I'll put it out in the open market, and nobody has to buy from you really, but getting a Bitcoin is not that easy. Not that easy. I mean, you can get like 1.5 Bitcoins, but try to get 3,000 Bitcoins, 10,000 Bitcoins. It's hard to do. It really is. Anyways, so arbitrage is risky in the Bitcoin world. So I've already mentioned in a previous episode. You might, if you're first time watching this, you might want to go back and watch all my episodes from the beginning to now. I know it's a pain in the neck, and you may skip through it, and I left a lot of great tidbit of information and a lot of great information. So, anyways, um, let's go on to 5. News is not that important. Um, yes and no. On a short-term trading basis, it is important. All right. Long-term, no, it's kind of not. But again, this is in the perspective of a traditional financial institution, exchange market kind of thing. If you looked at in the view of someone who is actively immersed in bitcoins, all of these things that the writer talks about doesn't really apply. Like if you're doing what this guy is doing right here, you're just looking at the screen and watching the price go up and down. Um, that's probably how most people will try to trade bitcoins. Okay, because that's what they're used to. That's what exists right now. This kind of whole scenario where you see all these things and you're trading and everything. Um, Bitcoin's not like that. It's nothing like that. You see me comment about this right here, right? And we talk about how, look at this price here, look at this price here. I use these for pricing only. I see, look at the difference in price in here and here and here. Well, anyways, I'm using these for prices only. I'm not using these to trade. I don't trade. I should say I do trade on these exchanges, but I don't try to trade in the traditional sense that what most people are probably thinking about or used to thinking about when they think of stocks, forex, and other things. Because those, in my opinion, those are closed markets. Those are meant for you to lose money. All right, those are designed for retail investors to lose money. Now, the only time you ever make money is when the whole market is going up. But even then, when the whole market's going up, um, you know, you're at the tail end of that market. So you're not going to be, as a retail investor, you're not gonna make a whole lot of money. You're at the end of the line. You're the last person to get paid. Everybody in front of you, the broker, the investment bank, the actual company, the market makers, all those guys, they make the money, and you're left holding the bag. You're lucky if you cash out, and some retail investor is holding the bag. And that's the sad truth about, you know, uh, the current financial institutions that are there. But Bitcoin's different, like I said, because you can take your Bitcoin and go somewhere else. You can take your Bitcoin and you can just sell to another person. You can take your Bitcoin and use it. You can take your Bitcoin and cash out. And so I think a lot of people don't understand how to trade Bitcoins because a lot, you you all may be thinking in terms of the old way, the old age, all right, the old world order of doing things. And then when you start learning the new world order, the new age, and the way to trade Bitcoins, I think that's when you'll start learning that Bitcoins are very different. Bitcoins are nothing like and I've traded stock. I'm not an institutional investor. I'm not a professional by any means, but I've done it. I've traded stock. I've went through a brokerage. I've gone through a forex. I've done those things, and it always seems like the odds are against me, and they are, and to some degree they are. So, Bitcoins are very, very different. I don't know how much I can stress that. I mentioned that in the very few first episodes when I first introduced Bitcoin, when I started making these episodes. Big difference. Big difference is that you take ownership of this Bitcoin, and you can take it, you can put it into the exchange, you can take it out of the exchange, you can put it in a different exchange, you can take it out of there. You don't even have to put it at an exchange. People will trade with you outside of these exchanges. All right, these so whether they're regulated or unregulated exchanges, the great thing about Bitcoin is you don't have to use these exchanges. You can use their prices. You can use. You don't have to use the exact price. Matter of fact, you can say, well, I want to sell my Bitcoins. Let me see, what is the highest price right now? Let me see, Coinbase. Yeah, Coinbase is the highest price. Their spot price is the higher price. But if you know anything about Coinbase, you know they charge you what, that 1%. So their buy price is right here, which is $5.99, almost $600. So you can dictate whatever price you want. You can say, well, if people are gonna buy Bitcoins, and if most of them are buying from Coinbase, they're paying like $5.99. They're not paying $5.92, right? They're not paying $5.92. They're paying $5.99. Well, you could say, well, and the other thing is, to buy right now, to do an instant buy, you have to be well verified, have an account for X amount of whatever days or months, and then you only get $1,000 of instant buy. So anybody who wants to buy anything over $1,000, well, they can't. So you can dictate your price, right? If someone wants to buy $10,000 from you, you can say, well, let me see, Coinbase buy price, I'll make it $610 per Bitcoin for $10,000. You could do that, and that's the way Bitcoin. That's the power of Bitcoin. So that's how you should be trading Bitcoin, in the real open market with real people. And go ahead, anybody who has Bitcoin, well, this is payback for all those financial institutions that have basically swindled you out of your money. Go make them pay a higher premium to get a Bitcoin. That's what I say. You become the market maker, because you're the one that bought it. The ownership is yours 100% of. You have absolute free will to do whatever you want with your Bitcoin. Unlike regulated markets, or closed market, they're not even regulated. I mean, I don't know how well they're regulated. Look at all the stuff that happened in the past 10 years. But I would consider, like, all those exchanges you see on Wall Street, those are closed exchanges. Okay, by the time a retail investor gets into there, or is able to get in, you've gotten the short end of the stick, in my opinion. So let me go back to that article real quick, right here. So there you go. Great article. I would read it, but I think the writer is talking in terms of current, the old world order and the old age, because Bitcoin has basically ushered in the new world order and the new age, in which the power comes back to the people. The people will control money. The people will dictate how they want to live and how they want to spend and how they want to save. And that value that you have, that you possess, that you own, you can also dictate how you want to shape your world, shape your virtual reality, and make it real. So that's the true power of Bitcoin. You can't do that with no damn stock. You can't do that with no Forex account. I've tried. It's a closed market. All right. It only serves, I would say, the people who have leverage. In other words, they have so much money that they can leverage that money to the point where they're not even using their money. They're using your money against you. Isn't that kind of weird? They're using your money against you because they have so much money that they got a deal where they don't even use their own money. They use your money to trade against you. So, but that's my opinion. I mean, of course, I don't have any concrete proof any of this happens, but I think there's people out there who know that this is very common, and that's why that's why I sold everything I had. I sold my stocks, any bonds, anything that's old world, old age, financial institution related. I sold all that. I'm not going to sell my house, damn it, because I need a place to live. But some people consider your house as a financial instrument as well. Again, that's going to be an old age thing too, because house should be a place to live, not a place where you're trying to make. Your house is not an ATM, in my opinion. It's a place to live, to be with your family, be with your loved ones, take rest. That's my, that's just my perspective. At least your personal house. If you do have investment house, it's good. It's a physical, hard asset, and it has value. It does. Land is scarce, and room and board. It's nice to have a roof over your head. So, anyways, I'm going to end this episode right here. I think this is a great article to talk about, especially for any active traders. I am a very active Bitcoin trader, and I don't use a computer. I don't do. That's the other thing. There's these bots that trade, and I have to admit there has to. I think not only is there manipulation going on, but there's information that is revealed before you get it, and it talks about that news and stuff like that. But not only that, but I think your trade orders are fed into a computer, and then that computer makes trades based on what your trade orders are, or where your limits and stops are. And that's the other thing about Bitcoin is if you feel that way on a particular exchange, well, you can take your Bitcoins out, you can still trade, but the difference is instead of you putting in an order, you can just use that exchange's price to make a trade. You don't have to actually put in an order into the exchange to make a trade. So there's a lot of ways where you can take advantage of your private trades, your private transactions, to the point where it's not revealed to these exchanges or regulators or people who are in position to abuse that information. Anyways, I think I talked long enough. Great article. I highly recommend you read it. So I'm not going to really do chart analysis. I'll eventually get one. Start getting back into chart analysis. Just this is another news episode, but feel free to like, dislike, leave a comment. Also do a video response. Until next time, stay tuned. Bye.